Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So the markets now are doing really well by any measurable standard. We have the NASDAQ and the S&P hitting all-time highs. The Dow's a few percentage points off of its all-time high, but who knows when that will happen. We don't really measure things by all-time highs or all-time lows or any of that kind of stuff. But it is interesting, it gets people excited when they hear about the markets doing super well. But that got me to thinking about what people think about when we talk about the markets. And I have to confess that we in the financial services industry don't do a great job of really explaining what we mean when we talk about the markets. But in general, whenever somebody says the markets, what they're really talking about are the indices, like the S&P 500, the NASDAQ, or the Dow. And so I wanted to make a point here in that a lot of people feel like, gee, my portfolio might be doing better or worse than the market. And there's some reasons for that. And the biggest one that I want to go into today is many of these market indices, aren't diversified. We all have heard, as we've talked to different financial professionals, that diversification is a really important way of making sure that you don't have all your eggs in one basket, and that you're trying to minimize the amount of risk that you're taking for the kind of reward that you're trying to earn. Well, let's take the S&P 500 for example. In the S&P 500, most people don't understand that that is a market cap weighted index. And what that means is if you take the number of outstanding shares of a given stock, you multiply it times the share price, you basically get the market capitalization or the market value of that enterprise. Well, people don't realize that in the S&P 500, which is an index made up of 500 stocks, the top 5 stocks in that index, Apple, Microsoft, Amazon, Facebook, and Google, make up 21% of all the performance of the index. So if you think about the 5 stocks that I just named, they all sound like stocks that are doing super well, as a result of all the isolation and the distance learning and the working from home and all, our buying stuff remotely and having it delivered to us. These are all companies that are doing really, really well during this pandemic. But 21% of all the performance of the S&P 500 in just 5 stocks, that's pretty much the definition of a lack of diversification. So it would not be shocking to me to hear people who own mutual funds, who don't just invest blindly in an index, which we don't recommend, but people who have a well-diversified portfolio of mutual funds or exchange-traded funds or a stock portfolio, not having the kind of performance that they might see as if they own the S&P 500 index. So we're not recommending that people sell everything and buy these indices because when it's going really well, like it is right now for these top 5 stocks in the S&P 500, things look amazing. But not too long ago, Boeing was the number 1 largest stock in one of these indices, and it's not doing so well right now. And if it weren't for these other stocks, doing really well and holding the index up, we might be seeing a completely different result. So we want to be careful to make sure that we don't, just rely on the performance of the markets to determine whether we're doing well or not doing well, because these market indices are not diversified by any measurable standard. So you really want to look at your individual investments and say, look, based upon the available data for this given investment, is it expensive or is it cheap or is it fairly priced? Is it paying me a dividend? So am I being rewarded maybe with not a lot of growth from a share price perspective, but I am being rewarded in a dividend or a yield of some sort, right? Don't try to get all wrapped up in tying yourself to, did I do better than an index or the quote markets? Because that can cause you to try to chase market performance, and that's never a good thing. I hope that made sense. If it doesn't, shoot me an email, provide a comment. I'm happy to answer any question anybody has about, the economy, the stock market. Things are about to get a little volatile. We're in the Democratic National Convention right now. The Republicans will be having theirs, I think, next week. We've got, 2.5 months, maybe 3 months until the election. I fully expect there to be a lot of volatility between now and then. But again, we don't buy and sell on volatility. We look at whether something's expensive, whether it's cheap, or whether it's fairly priced, and are we being paid properly for the amount of risk that we take. And sometimes volatility can cause people to sell too soon or to buy too early, and we don't recommend any of that. So if anybody has any questions, just reach out. I'm happy to answer anything that you might want to ask. But that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.